All right, let's go into the markets. SPY touching this 38 fib right here, and that doesn't mean that it's going to stop or it's going to hold, but we can see that even on the based on the price action, this was prior resistance that got broken above and became support, broke above and then came support here and then climbed back up. Now we're testing it, and I don't, you know, at the end of the day, we're going to see if this thing is actually going to, this 10 is going to cross this 50, and then we'll see what's going on from there. But right here, right now, you definitely see that there's some technical damage that we need to see put in place, or we're having some follow through, and we want to see if this is going to hold. This is a huge engulfing pattern. You know, I pretty much, if you've been watching my videos, you know that I like kind of trade the breakouts. So long side is not it right here, right now. If you want to go long, I would just wait. At the end of the day, this is not the time to be just saying, okay, I'm buying the dip and, you know, I like this name, or I'm going to look at some fundamentals to say, you know, I should be long here, or let me look at the PE or all that crap. That's not it for me. At the end of the day, and everybody has their own way of trading. At the end of the day, if it makes you money, it makes you money. But I'm saying that if you're looking to go long some names, or looking to go that long, the SPY right here, right now, just because of this, that I think there are better setups for you. The diamond, weekly, you can see the huge engulfing that pretty much engulfed all of this. Basically, a month and a little bit of some gains have been wiped out so far. And the daily, you could definitely see that there is some damage that has been done, broken to this key support that we were looking at, and it's broken at 50. So this crosses, you know, it has crossed before. Like we stated before, it's crossed here, but you know, at the end of the day, we want to make sure that we're looking and playing this thing accordingly. So we're not going to guess, we're not going to say where the bottom is, or if this is, you know, the top per se over here. We just trade what we see, and there were a lot of good short setups today. Look at the QQQ. That one, Apple missed earnings, so last time I looked at it, it was like 508. So this might drag down the NASDAQ tomorrow, and the SPY. So we'll see how that really plays out. But remember, you know, things don't go straight up or straight down. So we'll see how that plays out. The Russell has broken this trend line that we've pretty much shown for a long time. I mean, it's pretty much since last year. The whole of last year has been trading this trend line, and it broke it, okay? And it closed below it. So let's see if there's going to be any follow through, and maybe are they going to tap it to go up and then continue down, or they're going to recapture it and get back in the channel. Only time will tell. Now, since I mentioned Apple, let's start with that one first. And let me give my thoughts about earnings, okay? It's not that I think that earnings are silly to play. I just think that if you're looking at things from a technical aspect, I think that at the end of the day, you do a lot of work. You do probably a shitload of work to get some type of a probability advantage, basically using the charts and your technical analysis, charts and hours and hours and hours and hours of work. So what happens is they say, you know, there's people will say, okay, they'll miss it, or what happens if they make it? It could pop up, it could pop down. Even if they make it, it doesn't mean that it's good. It doesn't mean that the market's going to react the way that you think it's going to react. Like today, it wasn't bad, but it wasn't what was expected. Whoever's expecting it is the person that's going to decide, and the market has really sold off on it high. Now, hard. So I don't know where it's going to open, but again, you know, to take a bath on something that you could have just waited a day to see where it's going. And there might be some volatility stuff, and this might be something that you can look at as well. If you look at the VIX for Apple, you see that, you know, the volatility drops down tremendously during earnings and stuff like that. So you could play that if you know how to. But at the end of the day, if you're just going long or short on the stock based on just what you think or guess it's going to be, remember it's a guess. So use Vegas money at the end of the day, because it is gambling what you're looking to do, unless you're looking at a higher time frame, or maybe like a weekly or something like that, or if you're trend following and you don't care what earnings do, because you're only, you know, you know, maybe you're short or maybe you're long from like this crossover from here. That's fine, but at the end of the day, for the average swing trader, it's not a it's not something that you use all these technicals and get an advantage of. So why do it? Okay, and that's my little rant for that. But let's move on. It looks like it's going to be gap. It might be close to the 200. Remember, if you took the 200 off, would you still be, at the end of the day, it gaps all the way there? Some people might say, oh, it's going to fill the gap. When, you know, and you know, that again, that's just being hopeful, and hope is not a technical indicator. So Twitter moved to the downside. It got hammered today. It was down plus 6% at 7% at one point. So it might continue to get some lower, but definitely want some more of that to the short side. MasterCard has been getting hosed. I wouldn't, you know, I expect some type of balance, but this is definitely a name to keep on your watch list because you know, it's technically it's looking like it's breaking a little bit. So we'll see what happens from there. You got Visa as well, right at its 50. You got Facebook. You know, we talked about these highs that it thought it was going to break up, faked out, and just faded all the way down. It's holding the 50 right here, right now. So we'll see how that works out. But you also have LinkedIn, another name that got crushed today, down plus 5%. You got Google. Google is tested the 50, came off the lows pretty good, so that's a good sign on heavy volume. But I wish it would have been a little bit more in the candle to kind of give you a hammer or something like that. So remember that if it gets below this low of 1082.27, that's it. The tail is broken, even if you want it. And this is kind of like a doofy hammer, quite honestly. I wouldn't even consider this to be a hammer. I'm just saying that it bounced off the lows. So just keep that one in mind. You have Priceline. Priceline gave up a lot today, 3% on a plus, you know, four-figure stock. Is, you know, it pretty much, you know, from the jump, it pretty much just ripped to the downside. So technically speaking, you just got to wait for this one to set up. I don't know if you would say that this was the triple, excuse me, well, triple top. I don't really know if triple tops, but at least the double top, or it broke above and then faded, and the breakout didn't hold. So keep that one in mind as well. One that did surprisingly well today is Quartz, Michael Quartz. I don't know what the hell they got in bags or something like that, but I mean, it's doing pretty good when you could do all things considering, right? So kind of, damn, let me take it off. So really trying to, you know, all right, whatever. So pretty much it held up today, which was kind of surprising. Like I was like, wow, okay, that's pretty good. And then you have Quest Core. It looks like it's flagging, looking like if it breaks above this, you know, this 65.40, it could go to the upside, which was pretty, you know, I wasn't expecting that as well. 3M got hammered, still getting hammered to the downside, and 3D, again, you know, gave this little flag here, broke down and continued to break. So technically speaking, there's a lot of stuff that's broken, and you don't have to be a hero. You don't have to say, oh, well, you know, look at the fundamentals and pick one thing and say, I like the fundamentals, so I'm going to buy. There's a lot of pain when you do that, because even if the fundamentals gives you the health of the company, the technicals will give you the timing of when you want to go long, in my opinion. And some people, you know, at the end of the day, some people always throw that Buffett, oh, Warren Buffett. Yeah, Warren Buffett is trading so much he can move a stock. We're not at that point. So my point being is that if you want to go long certain things, don't think of stuff as cheap, because things can go cheap really, really quickly. Remember, BlackBerry is cheap, right? But if we start going back months, you know, there's people that bought, how do I get this? People that bought all the way up from 150, and they've been calling cheap all the way down to this crappy $10 level. So keep that stuff in mind when you start hearing people throwing around that word cheap. You know, I stay clear when I hear cheap. So that's my word of advice. Trade them well. I'll post up some more charts on Twitter, some stuff I see as I do my analysis and my you know, my finds, and we'll go from there. But trade them well, and remember, cash is a position. Sometimes it's the most profitable position. I had a really, really good friend of mine wanted to buy some Apple. I said, listen, you know, I wouldn't do that before the earnings. He wanted to buy a couple hundred shares, and he ended up, I told him, your cash position is up a couple thousand when you think about it, because you could have gotten hosed. So again, sometimes it's that capital preservation that's really helpful during times like these, so that when things get back to where you like it, you have enough powder to start firing again. So take care.